Hello and welcome. This is Property Hotline and I'm Kavita Krishnan. We are answering all your questions on home finance today. With me in the studio is Harsh Roongta. Harsh, as you know, is a SEBI Registered Investment Advisor. Harsh, welcome to the show.
It's a real pleasure.
Let's get started with this question that's come in from SS Verma. Now, he says that he has a 50 lakh rupee loan with HDFC, which is now being charged at 8.95%. Recently, he went to the bank and sought a 10 lakh rupee loan for buying a car, and he was offered an interest rate of 8.45%. So car loans are now cheaper than existing home loans, he says. Is there any regulation that prescribes that HDFC must charge existing home loan borrowers the same as the rate of interest as they give to new home loan borrowers? Harsh, you've been part of this discussion. We've been debating this ad nauseum on the channel, and it's a demand, in fact, that we've put forth before banks and before the RBI and the IBA as well. But Harsh, tell him what he can do till banks actually turn around and start offering fair treatment to existing borrowers.
A little bit of addition to that. HDFC isn't governed by RBI. HDFC is actually governed by National Housing Bank.
He's talking about the HDFC Bank from where he's taken the loan. Though the fact is they are selling the HDFC loan.
The bank does not give home loans.
Exactly.
Only HDFC Limited gives home loans. So clearly, if he examines his document, he will realize he's taken a loan from HDFC Limited, no matter which office of HDFC Limited or HDFC Bank he may have approached.
So Harsh, just let me interrupt a little bit over here. There is a little bit of clarity that is in order over here. What customers need to understand, what home loan borrowers need to understand is essentially this. If you are taking a home loan from HDFC Bank, the bank does not give you a home loan. HDFC Bank is selling the home loan that it buys from HDFC Limited. So essentially the loan that you're being given is coming from HDFC Limited, and HDFC Limited is the organization, is the company that is servicing that entire home loan. HDFC Bank is just an office which helps you buy that loan. It is like a reseller, as they say, when you buy a mobile phone, you have a reseller. HDFC Bank works as a reseller for HDFC Limited loans. Harsh, if you could answer this question, and how can he get a better
So the impact of that is that obviously his loan is not covered by RBI. His loan, the regulator for his loan is the National Housing Bank. And you may be surprised to know that National Housing Bank actually has a regulation which says that the housing finance companies cannot discriminate between old borrowers and new borrowers. So you have asked whether there is a regulation. The answer to your question is yes, there is a regulation. The question that you have not asked, is that regulation enforced? The answer to that is no, it is not enforced. In fact, a circular was put out saying it would be enforced from a certain date, and it was withdrawn. It was said that it would be reintroduced after consideration. It's been many years, it hasn't been reintroduced. So I think one thing is very clear. I think it's a separate battle to get the regulators to force their constituents, whether they are banks. In the case of banks, it's the RBI. In the case of housing finance companies, it's National Housing Bank. For them to force the lenders to be more fair, I think is going to take a while. It might even probably have to proceed on legal action or whatever. But as a consumer, one thing that you could definitely do is shift your loan. I am repeating, today, if you have been a good customer, if you have paid your installments on time, you can shift your loan without any cost at all. There would be zero cost, except unfortunately in some states like Maharashtra, for example, there is a stamp duty when you create a mortgage in favor of the land.
Duty?
In Maharashtra, it's 0.2%. Fortunately, Maharashtra, I think, is among the 1 or 2 states that levies this stamp duty. Very few states have this stamp duty. So in most states in the country, you should be able to shift your loan with zero cost. If you have been a good borrower, the new lender will give you without any cost. The old lender cannot charge you anything for shifting.
But the new lender would take processing fees from you. So this
if you are a good, I think you can negotiate that very easily. You can, yes, on paper there is a processing fee. It is typically capped at 10 or 11,000 rupees, and even that can be waived if you are a good consumer.
So if you're a good consumer, which means if you've been paying on time, if you have a good CIBIL score, there is no reason why you should not be able to waive off that processing fees. Of course, the stamp duty is something that you will have to pay in a couple of states. So the best thing that you can do right now, shift your loan, and you will have to pay a 0.2% stamp duty, at least in Maharashtra, on that particular loan. Sudhakaran says that he is 61 years old. He receives pension from the government at 24,000 rupees per month. His wife is 59 years old and she also receives pension at 21,000 rupees per month. Now, can they get a home loan for a purchase of a flat? Can pensioners get home loan?
Well, answer to that is in two parts. Yes, there will be some lenders. I mean, HDFC, for example, has a program where they can give, but they would give for a very short period. So you will typically say get it at most for 5 years. Okay, on 5 years, based on the income that you are giving, typically assuming 8.75% interest rate, you're talking of a 8 lakh or a 9 lakh loan that maximum you will be eligible for. A bigger question, even if you say get a 10 lakh loan, the EMI on a 10 lakh loan is going to be 21,000 rupees every month. At this stage, when you are only having pension income, do you really want to give out that much of your monthly income into a home loan? So, unless you are doing it with your children, in which case, say they are meeting part of your EMI burden, otherwise, I think you should re-examine, please take professional advice, whether it makes sense to buy a property at all. Maybe you will get a loan, as I said, 9 to 10 lakh loan for 5 years, maybe you will get, but please do re-examine whether it makes sense to take a loan.
Right, because paying off that loan, and it is a long-term commitment that you're essentially making. So that is something that you need to be very, very clear before you commit to something like that, especially if you are retired individuals. Basavaraj writes in and says that in order to avail a home loan and its benefits, should he buy a ready-to-move-in property or a property where possession is expected soon?
Well, I think if tax deductions are the only reason that you are using as a factor to decide your property, please remember tax deductions in respect of home loans will only first be available in the year in which the property is taken possession of by you. So if by 31st March, the property of this year, let us say 31st March 2017, if you have not taken the property, then ready possession property, then you will not get any deduction in this year. You will start getting a deduction only from the year in which the possession is handed over to you.
Right, and by ready possession, of course, what we mean over here is that the OC of the project has come through, the OC has been handed over, and the developer has officially handed over possession to you. That is what ready possession means. Only once you get that can you actually claim tax deductions on the property that you have bought. Harsh, you want to come in?
See, the Income Tax Act does not define what ready possession is. So, I mean, in Bombay, for example, I think 70-80% of the properties don't have an OC. That does not mean that you will not get tax benefits.
But the developer has to
so that is his liability under a completely different act. I think as far as income tax is concerned, as long as you have the possession of the property and able to prove that, an OC may not be a necessary document. Purely, I repeat, from an income tax perspective, your title and other things obviously are not very clear till the OC is there.
Right, but having said that, like Harsh rightly pointed out over here, an OC is very, very, very important, because an OC means that the building is safe for human habitation, that you can actually move into that, all the utility connections, etc. are there, and it also means that you are the rightful owner of the title of that property, which is why the OC is such an important piece of document. Mahesh says that he bought a property recently and the builder promised its delivery in 2018. Now he booked the flat on a pre-EMI offer. The property is not yet ready, but he needs to start paying EMIs from this month on. Can he postpone the first EMI installment?
Very difficult to answer that question. I mean, look up your contract. You have signed a contract. Please look up that contract. What does that contract say? if that contract forces, and in all probability the contract probably says that you would have to pay the EMI even if there is a delay in the construction. I am reasonably sure that that is what the contract says, and if that is what the contract says, please do pay your EMI. Whatever dispute you have with the builder, please take that up in another forum. Do not delay the EMI, because that will spoil your credit record and your ability to borrow in the future will be severely damaged.
So read your contract and do not delay the EMIs. Pay your EMIs on time, which is very, very important. We'll slip into a short break now, but Property Hotline will continue on the other side. Do stay tuned. Welcome back. Harsh Roongta is in the studio and we are answering all your home finance queries today. Let's take Saurabh Khandelwal's question next. He says he's suffering an issue with SBI related to a home loan that he took for his property. Now he's paid up to 100% for an apartment in IREO's Kayon project in Sector 60 Golf Course Extension Road, Gurgaon, Haryana, under construction linked plan. Now the apartment is ready. The builder is offering possession upon payment of stamp duty and registration charges upfront directly to an SBI account in the name of the relevant government authority. Now the builder has got partial OC from the authorities, since out of the total 6 towers in the project, they are offering possession only for 3 towers. Also, there is no state provided electricity connection as yet. The same is being substituted in the form of DG sets, which have a very high running cost. Now Saurabh says that he's already paid the complete EDC and IDC charges due to the government agencies, but basic infrastructure like water, electricity connection, accessibility, etc. are not yet ready. In such a scenario, he says that he's not willing to pay the stamp duty and registration charges at this stage, but only when the project is completely ready and habitable. But he needs to take the possession now, since he has paid every penny due to the builder and nothing is pending. But IREO obviously refuses to give him possession until he pays up the stamp duty and the registration charges to the government. He wants to know if there is any time frame within which he can pay up these charges after taking possession of his apartment from the builder. What is his time limit? And since he is planning to file a complaint with the NCDRC for deficient product delivered by IREO, will it help him if he delays possession for a month or so and wait for the new law, that is RERA, to become applicable in all states including Haryana? So here's a man, he wants to take a stand against the government, he wants to take a stand against the developer. He does not want to pay stamp duty because the government has not given him utility connections. What is wrong with what he's asking?
I think what is wrong with what he is asking is that he is using to try a lever. He is trying to use a lever which does not exist. In fact, stamp duty and registration should have been paid by him at the time he booked the apartment. A lot of people postpone the stamp duty and registration.
No, but also in some markets like in NCR, typically stamp duty registration is paid upon possession. After that is when they sign an agreement, a final agreement, because what they signed earlier is more an allotment letter.
So that is because they want to delay the payment of stamp duty and registration. It's a practice. I think it makes sense for you to pay your stamp duty and registration when you take allotment. Paying your stamp duty and registration is what perfects your title. And by not paying it, I can't understand what benefit you get. I think what probably you have an issue with is the fact that when you take possession, the builder is going to ask you to sign all kinds of documents which says that, oh, you've taken possession, you waive any deficiencies like power not having been given, etc. I'm telling you, please go, please take legal opinion, but in practical terms, please go ahead and sign whatever documents the builder is asking. Take possession, pay the stamp duty and registration. Go ahead and take legal action. There are umpteen decisions of the NCRDC as well as other courts which says that any waiver that a customer signs under duress, when very clearly a waiver that you sign at the time of possession is clearly under duress, won't be binding on you. So please go ahead, please perfect your title, pay your stamp duty and registration. Unfortunately, you have no other lever with the builder. One big lever that you have is if you can join hands with other buyers. Together, if you approach the NCRDC, your hands will be more powerful. Today, I think most of the decisions coming out of the NCRDC are in favor of the buyers. So I'm sure you will get relief, though it may take a little bit of time.
In fact, Saurabh, what you also need to understand over here, like, Harsh just pointed out, is that the stamp duty registration ensures that the title is in your name. Also here the developer is willing to give you possession, he is willing to give you possession with a partial OC, which in itself is a big deal. So take it. That should not in any way hamper you from seeking justice, from standing up for your rights. So take the possession, and when you do sign those papers, you can actually put in a letter, sign it alongside a letter, an affidavit stating that you're signing this under duress, like Harsh pointed out. And then you can go and seek justice from the court. And the best way to do it, of course, is to get all the other home buyers in that particular complex together, and that will help you, in fact, to put more pressure on the developer and the government too. Let's move on to Amit's question now. Amit asks us which banks provide home loans for purchasing a residential plot. Now he wants to avail a home loan which would have provision to buy a residential plot and construct a home on it thereafter.
So I think there are two things. I think banks or lenders, most of the major lenders will provide you a loan even to buy a plot. But I think plot loans, as they are called, are far more restrictive than regular home loans. For one, typically a bank will only fund plots bought from development authorities of a particular state, or they might have certain builders who are approved for specific plots. So only those kind of plots would be funded under a plot loan. Plot loans are more expensive, typically 0.5% to 1% more expensive. Plot loans are available for shorter duration, typically maximum of 15 years. Again, the down payment requirement in plot loans is higher. No tax deductions are obviously available for any repayment made on a plot loan. If you're talking of a composite loan with a plot and construction to begin immediately thereafter, I think maybe you will be able to get that kind of a thing. Typically, the bank would require you to fund the plot on your own, and they might fund the construction cost, though you might get a bank to fund part of your plot cost. But please remember, if your idea is to buy a plot and then sit on that plot and not construct a house on it and just speculate on the plot, you just have to pay a higher price for that privilege. Don't try to save on the interest cost. You won't be able to save it.
Right. So what you're also saying when you said plots sold by certain builders. Now there are a lot of gated communities in which plots are sold. So even over here you have to take a separate plot loan. A home loan does not cover that.
So if you, as I said, if you're taking a composite loan, the bank is going to judge whether you are actually planning to build a house or you are actually buying a plot to speculate on the land price. And if you don't begin your construction within a reasonable time, say 3 months or 6 months, the loan can be called back. Please remember that. So don't try to take a plot loan in the guise of a home loan simply because home loans are cheaper. Number one, you would have difficulty getting it. And number two, even if you do get it, when you don't begin construction, you will get into trouble.
Right. One other question, you mentioned that plot loans are far more expensive as compared to a home loan. Now, what happens to the interest rates on plot loans when interest rates on home loans actually go down or they increase? Does that happen to the plot loan as well?
On paper, yes, they are floating rate loans, but like home loans, they float upwards, they never float downwards.
Right. So those are plot loans for you, far more expensive than home loans, and they come with a lot of riders. You need to keep that in mind. Rohit says that he wants to take either a loan against property or a reverse mortgage loan. Which one should he opt for? He's looking at a loan of 1.3 crore rupees. He works as a vice president with a big group. He earns 5 lakh rupees per month, and his salary and his CTC is 60 lakh rupees per month. He doesn't tell us how old he is. Harsh?
Well, I think there is this huge thing about reverse mortgage. I mean, reverse mortgage is meant for senior citizens staying in their own houses. obviously if you're working, I'm assuming you're not a senior citizen, that you're not above the age of 60. So forget about reverse mortgage. It's not going to be available. Even if it is available, say you are a senior citizen, even if it is available, the maximum lump sum loan that you can get is 50 lakhs, and very few banks actually give you even that 50 lakhs as a lump sum loan. The very few reverse mortgage loans that actually get done are always disbursed in installments. It is meant to be a kind of a pension for people who own the property that they stay in. So I think just forget reverse mortgage. You've not made clear what your purpose for the loan is. I think that is one big thing missing. Depending on if the purpose is to buy another house, you might be better off taking a regular home loan. If the purpose is something else, you can look at a loan against property, against your existing house.
In fact, Harsh, I would want to bring you in on that as well, the purpose of the loan, because we've had a lot of questions from pensioners, from senior citizens who've asked us if I can take a reverse mortgage and use that money to get my son married or etc. Essentially what they are hoping for over here is a one-time payment, which is not the way a reverse mortgage works, right?
No, so on paper, as I said, on paper you can get a lump sum reverse mortgage of 50 lakhs. In actual practice, to the number of reverse mortgage loans itself happening, I don't think even there are 4 digits across the country. I'm not sure of the numbers. But very few reverse mortgage loans actually happen. Whatever is happening, I think the maximum lump sum that you get typically is about 12.5 lakhs. And banks prefer giving it to you in installments. That is absolutely clear. If you don't have a pension, the reverse mortgage acts as a pension. So you can get 12.5 lakhs if that serves your purpose. Maybe reverse mortgage if you are a senior citizen. As far as I think Rahul is concerned,
right.
His query very clearly is unlikely to be a senior citizen. You should look at a loan against property if you do not have any other.
So look for a loan against property. What you do need to remember is a reverse mortgage is essentially the reverse of the mortgage or the home loan that you take, that you and I take as borrowers. What it means is the bank is paying you an EMI instead of you paying them an EMI. So chances of you getting a lump sum from a reverse mortgage is very bleak. Even then, even if you do get it, it will be around 12.5 lakh rupees. It's ideally suited to those who do not have a pension and who want to live in the house that they own, and the house pays for their survival. With that, we come to an end of this episode of Property Hotline. Harsh Roongta, thank you very much for coming in and answering all those questions. And of course, any questions on real estate, do send them in and we'll make sure that they are answered. Thank you for watching.